I'm going to take a look here at gold versus the dollar. This is kind of a review of the long-term analysis that we showed many months ago. And I think it's time to look at this again. Of course, there are many gold bugs, gold bulls out there that I think are going to be looking at this and saying, wow, maybe I need to look hard at my positions right now. And let's take a look here as we take a look at this analysis. I'm going to start out right here on this chart. This chart is a chart of gold versus the dollar. So the gold market is the candlestick chart, as you see right in here. And that shows you the incredible rise, of course, that we had from 2000 area right over there in the 200s, where it made it way up here to 1900 right there. And what we're looking at here, that line that you see right there, is the dollar. Now, the reason I'm showing this chart is because I want you to see the gold versus dollar comparison, the correlations between them. The average correlation coefficient is about minus 70%. That means that the gold versus the dollar, they move in opposite directions about 70% of the time, or 70% of the amount. The range, actually, because there are time periods when they move together, is about plus 45 on the correlation coefficient, to which is very, very rare, brief periods of time, to about minus 90%. In other words, it's almost an exact inverse correlation much of the time. So that's really important, because if you can analyze one, you're actually analyzing the other, or the inverse, when you look at that, because it will be just about always inverse. A good example right in here, where the gold market was ticking up strongly, that was right over here where the dollar market was ticking down strongly. So that happens a lot. I want to look at that a little bit closer in here, the dollar versus gold, and I'm going to grab a different drawing set in here as we look at the monthly versus the dollar. So there you go. All of a sudden, there's a lot on this chart as we look at cycle analysis. The cycle analysis in here, what I'm looking for and what I really want you to focus on is that there are harmonics in here. In other words, there's a dominant cycle, and when you get towards the end of the cycle, there's a correction that you can see right over there. There are minor half cycles that we have drawn in there, and there are a really minor quarter cycle. So it's kind of a dominant, intermediate, and quarter cycle. When you get to where all three of them are going down together, you get market corrections that you see right over there. They're a little bit steeper than other corrections. The final quarter right in here that you could see, a steeper correction right there. The final quarter right over here, you can see a steeper correction right over there. And look what's coming up right now. Now, what's important to look at is the fact that the rally phase right in there, you can see, came up and failed quickly. That's what happened right in here. The final quarter came up and failed quickly. And when that happens, you're pretty much sure that the rest of this is going to be a struggle for the market. And that's where we are right now. Now, these green areas right over here that I highlighted are the opposite, inverse correlation. So while this was correcting with 3 cycles pushing down, the dollar market was moving up sharply, as you can see, which is typical. Here you could see this correction right over here, 3 cycles coming down. Look at this line on the dollar exploding to the upside right over here. So there's a correlation that I'm showing you, or inverse correlation, in these periods of bigger declining phases, that where the dollar will move strongly inverse to gold. This one right over here, look at that sharp move up in here in the dollar, while gold was moving down in this 4th minor cycle right in here, and that actually brought the dollar up from about 80, 82 all the way up here to getting up over 100. So that was a very, very strong up move for the dollar. So where are we right now? Well, we're right over here where the gold market should be correcting. That would probably mean that the monthly chart, and we're looking at a monthly chart here on the gold market, that it would be showing you on the dollar that there would be a probability of a period of advance in there. So what I want to do is show you how that works and switch this over to $DXY right in here. And here is the amazing analysis on the dollar. Monthly analysis that we're looking at. Cycle harmonics in here that you can see we put in there. If you want to learn about this, go to askSlim.com to our cycle workshop page. And you can see in here where the big advances came that I showed you while the gold market was getting hit. And here's where we are right now. See the bottom in here, the important bottom and the big upside move, the important bottom and the big upside move in the dollar. Look where we are right now. I actually have this projected out, and I'll zoom in for you to see, to a modest advance. And here's the dollar ticking up as these cycles are now pushing up. And this points to, well, this is 94.5. This right over here, if it wants to be stronger, is around 96. And this gets up to about 97.80 right there. It is reasonable to expect that the dollar during this rising phase is going to move up very strongly. And there could be a lot of reasons that support this fundamentally, especially the government tapering could bring demand for dollars. And that would be a good reason for it to go up. Also, the other economies in the world are really at a different phase than the U.S. market is, with our growth here exploding to the upside, where the other ones are really lagging. That could, push interest rates up also when you look at that. And of course, there's a shortage of treasuries around right now. We'll see how that settles into this also. But this really makes a case for a big upside move. I want you to note right over here, when at this price right over here last year, we were projecting a large drop right over during this case, and we were in this area where the dollar should be falling, and it did. Same thing happened over here, and this was kind of a mid-cycle area where it did that also, but right now we're in the rally area. So I'm showing you this big upside move potential in the dollar right there, and if it gets to 96, that's going to be a pretty big upside move. And the gold market right in here, as I look at /GC, the inverse of that, where this points to the downside. And you can see how the cyclical patterns are suggestive. The dollar is ready to move up. 96 might be reasonable. And the gold market is likely to struggle until July or mid-year of 22. That does give you a picture in here of the gold market that actually could be a lot of trouble for gold, and what looks like a good period in here coming for the dollar. So I hope you enjoyed that analysis. I actually enjoyed putting that together for you.